Looking at the dollar index quite closely.
I am, and I think we have some good news at hand as far as the dollar index is concerned, because, very simply put, two things generally are quite negative, and they follow each other as well. One, the rise in developed market yields, for example, that usually causes a wave of risk aversion, especially Asian emerging markets, and then actually emerging markets in particular. The other is the dollar rising. Now, both things were happening over the last many days, actually last many weeks, ever since the Brexit happened. The US 10-year, for example, has moved from 1.3 to 1.8. The British guilds, they've moved up the most. So it's actually the UK, what's happened to the US 10-year, Germany, Japan, in that order. I mean, if you take a look at the top four, movement as far as guilds are concerned. What that has meant is that the dollar is strengthened as well. I mean, it's almost a reflexive trade. Money moves in, a dollar becomes more, attractive. And we've seen a marked appreciation. I think we discussed this yesterday briefly in the morning. Marked appreciation against currencies. Last week, for example, the pound, of course, we've got we can explain it very easily, but we had big appreciation in the dollar against even currencies like the Swedish currency, the Norwegian currency, the won, the Korean won, etc., etc. So dollar was actually pushing ahead. This morning, against Asian currencies, the rise has essentially been halted. I said it's good news. We know, I mean, the dollar rising usually is a sign of risk aversion, money heading back home in that sense, right? So let's keep our fingers crossed whether the halt is temporary or, the rally will resume once again. But just to kind of pay attention to this graphics on air, there is no real meaningful news flow behind the dollar move against Asian currencies lower today. I mean, the dollar is weakening a little bit. It's still flat against the major currencies like the pound, the euro, etc. But against Asian currencies, it's actually lower. I mean, you look at the Korean won, the Singapore dollar, the Chinese currency, the ringgit, the Malaysian ringgit, etc., etc. Consolidation and pullback after, and maybe some profit taking after the recent rally. I mean, that could be one reason. We also have the US macro data, which is kind of disappointing a little bit now after some very positive surprises in the recent past. So the Empire Manufacturing Index, for example, that survey, for example, which came out yesterday evening, was a big negative surprise, although it's not tracked that much, but we're just kind of groping for reasons. And Asian currencies are basically against the dollar are back to levels from where the dollar broke out against these currencies last week. So I just want to kind of highlight that. The rupee also, I think, will see some kind of relief in that sense. Yes. It could head back to the 100-day moving average or whatever. It's opened lower. The rupee is opened stronger against the dollar. Yesterday, it closed at the lowest point of the day against the dollar. So dollar rupee opened lower at 66.79. So.
Okay, well, we will also be watching how debt figures do in terms of flows, because we've seen an outflow of over 6,000 crores just in the month of October when it comes to debt selling from FII. So that'll be an important cue to watch for the rupee as well as the equity markets. But let's get talking